Hello,
Hey Marta. Hey everyone.
how are you?
Good. How are you?
Good, thank you.
Good. We'll start in a minute or so.
How's your quarantine going?
How's my what going?
Quarantine.
Oh, it's okay. Yeah, it's got its ups and downs, but it's we're getting through it. So can be challenging at times with young children, but they've been good overall.
Good.
Let's see. Let's give just another minute or two for folks to join. Well, let's begin. Hopefully, let's see, anyone who's missing will be jumping in soon. Hello, everyone. Thank you as always for joining. Glad you're here. Let's get into our agenda. I've got an announcement or two before we get started. As we look ahead to the syllabus to see where we're at, entering the busy time of the semester, which is even more strange given that we're kind of in this online environment. But looking at the syllabus, we talked about presentations next week versus the 21st. I'm curious to hear your feedback on that. We've got one last assignment, which I posted to Blackboard recently, and I went ahead and pushed the deadline for that back a little bit, if it's all right. We'll have that due the last day of class, Tuesday, April 28th, just to give us some time to deal with what's going on everywhere else. So the last assignment on retirement planning, if you're in the financial modeling course, it'll look a decent amount like the first assignment in that class, actually. But we'll have that due the last day of class. And of course, folks have been pretty good about keeping up with mini exercises and participation. I'll sort of taper these off in this course as we go for the rest of the term. And in fact, looking at the syllabus one more time, we've got just a little bit of financial planning content left. And actually, in looking at the last chapter, comprehensive financial planning, it's really focused on sort of specialized software packages that financial planners use, and we don't have access to those. So I was going to go ahead and not cover chapters 17 in depth if folks are okay with it. As always, if you want to spend more time on it, if you're interested in it, feel free to talk to me about it. But we'll look for, I think it would be really good to focus on the fund management for the last few weeks of class in this course, if it's okay. So any questions about that at all?
For the reports due, is that the presentation and stuff like that?
So the presentation itself, like the slides, your groups will present either April 14th or the 21st. So obviously your presentations have to be done by then. Yeah, and then there's a written report associated with the project, with the fund management as well. So let me pull up the syllabus to see that. All right, so part of it is analyzing stock, managing the fund, and then a written report that really just goes into more detail than the presentation. So yeah, currently that's listed as being due on
28th.
Yeah, the 28th, but I'd be open to pushing that back, since we've got assignment 5 will be due on the 28th. And then maybe we could push the written report due date back after classes end, just to give some more time.
Is there a rubric for the report on Blackboard or something? Like, is there a page requirement or something like that?
Not really. If you take a look at under the fund info, some of the sample reports, like the written reports that we've had in the past, you can get a sense for like how they look, and kind of, I would follow the format of existing reports that are on here.
Okay.
There's some good examples. So a lot of this content will be in your presentation, I would hope. And then you'll have some more like written text that'll go along with it.
Okay.
So any other questions or concerns about the timelines? Well, if not, let's kick it off with,
Can I just say something real quick?
of course, please.
So you said we're gonna present either next week or the following week. Like, when are we gonna decide on that as a class?
That's a deliverable for tonight. So I'm hoping that you guys have already come to a consensus within your group, and let's talk about that. So yeah, I guess if some groups want to go next week and some groups want to go the 21st, that's fine. Otherwise, if everybody wants to present on the 21st, that works as well. So we'll finalize that tonight.
Okay, cool.
Yeah, we'll finalize that tonight.
All right, cool.
Any other questions? Good questions so far? Okay, well, let's get into the content for tonight. We'll start with Michael's question about the point about special issue treasuries that the Social Security Trust Fund invests in, because I think it's interesting. And then I want to hear what you've got for me on the rest of these deliverables. So let's start with the special issue treasuries. Social Security Trust Fund. All right, let me get back to the presentation slides. We saw that, right, the trust fund in past years, the Social Security Trust Fund has Social Security has taken in more in tax receipts than it has paid out in benefits, right? So there's a few trillion dollars held in the Social Security Trust Fund, and they invest in these special issue treasuries that no one else can invest in. So back to Michael's question, why do they make these special issue treasuries? Why can't they just buy treasuries on the open market? And let's start there. Let's see. Oh, and there's a chat message, which is hard to see, but let's see. What's it?
Yeah, I had that question because you know, as the mini exercise and stuff, it was saying how like in like the year it was like 2034, like the trust fund will be insolvent. So basically, like, you know, it will be uneven. So, and then you mentioned that the special in special treasury, the special issues, like that's the only ones they invest in. So it's like, why wouldn't they just invest in the ones in the open market to hopefully like potentially like help with that issue? You know what I mean? So like, yeah, that was just my question.
Yeah. So yeah, good questions. Let's hear from other folks on it. Who looked into this?
Could it just be that the ones that are reserved only for the Social Security Trust Fund are like they're safer and they're more customized towards the needs of the trust fund?
Yeah. So they're safer, right? Yeah, that's one point. They're safer. And then,
Another would be like just in general, like the government kind of operating in the open market kind of be like a sketchy idea.
could be. Yeah, I mean, it's interesting because the Federal Reserve is buying and selling treasuries all the time to try to keep the federal funds rate at its target level. So they do that, but yeah, but the Social Security Trust Fund does not.
So what would make it sketchy?
What do you think, Sean?
I mean, I guess I was just thinking more of like investing in just like, I guess not so much like the open market in treasuries, but just in securities in general that like the general public can kind of invest in. I guess because I was reading an article about like what if the fund invested in stocks as opposed to like a treasuries, and I guess like that can kind of pose some problems. So I just was kind of thinking of it from that matter.
Yeah, it's a good point because if you've got a 2 point, like if they went from investing in just these special issue treasuries to doing something in financial markets, I mean, $2.8 trillion is a huge amount. So if they start investing in financial markets, it's going to have big impacts on the price. And yeah, and actually,
Yeah.
the Fed is doing things like that right now, where they're buying, asset-backed securities and other kinds of bonds on the open market, and it pushes up the prices, right, to help, and it helps provide liquidity in financial markets. And then people differ on whether like it's okay for them to do that normally. But yeah, that's a good point.
Yeah, I was also thinking that since Social Security is something that like if people are gonna like rely on to live, like maybe going in the open market might be too risky because if it goes down, like it'll be like really negative to them. But it's crazy because like in 2034, like it's just gonna be insolvent. So it's like, what are they gonna do to fix that? Like what other things could happen?
Yeah, that's a good question too. Let's wrap up the Social Security, the special issues thing first. So, like Victoria said, special issue treasuries are safer, and the reason they're safer is that when the trust fund buys those treasuries directly from the Treasury Department, they don't have to worry about what the prevailing like market price that they buy and sell treasury bonds at is. So, like the trust fund doesn't have to worry about buying treasury bonds in the open market and then interest rates rising and then they sell them at a loss. So like it's like even less risk than normal treasuries that investors can purchase. And then to the market liquidity comment is interesting because it gets to Michael's point, like, oh, you could provide market liquidity and then also maybe even earn a higher return by investing in other kinds of investments. And I guess seems like I wonder if it's I don't know if it's like they're forbidden by legislative action to invest in anything except treasuries, because something tells me that, yeah, I'm sure people have thought about it in the past, like, well, why don't we try to invest in something that has a higher return, especially if it's a long-term like investment vehicle. If we assume Social Security is going to be around, why not take on some market risk and get compensated for that? But evidently not a possibility right now. But then to your point, so what happens in 2034 if nothing changes, right? If our policymakers can't figure out how to stop Social Security from spending more than it takes in, and there's no money left in the trust. Like if Social Security runs out of money, then we said in the presentation that then, well, when that happens, they're required by law just to pay out only as much in benefits as they take in tax revenues. So then that's like getting a 23% pay cut if you're retired and living on Social Security. So
I wasn't here last week for a class, but isn't Social Security just supposed to be like a supplemental form of income in retirement? You guys might have said this, or maybe I'm wrong. I don't know.
yeah, I mean, it depends. I mean, it used to be like people used to just expect it as a source, as maybe it depends on your lifestyle, I suppose. But people some people use it as their only source of retirement income. You know, if you've saved for retirement effectively, you're probably not relying on it, but it's a nice treat to collect it. Not really treat, but you know, it supplements it. But like for me personally, I'm not banking on getting any kind of Social Security payment when I retire eventually, because like something's going to have to change either. Well, let's talk about that. What would have to change to keep Social Security from running out of money by 2034? What do you all think about that?
More taxes is one option, I guess.
You could raise taxes, right? Raise the payroll tax.
Yeah.
Or invest, or like we were talking about, maybe change how they're investing and invest in vehicles that will allow them to have higher returns.
Yeah, I'd be for that, but yeah, that's another possibility.
Yeah, and then also would be to just act very quickly too, because I was reading that like the more they wait, the bigger it's gonna get. So that would probably be the biggest thing, is to act like as soon as possible rather than like later.
Yeah, and it's just like it's the kind of problem that our current system of checks and balances isn't set up to address like effectively, right? You have to act quickly, and then you know, have a clear, you know, be able to make changes now to impact things positively in the future. Like, nobody wants to do these things. But apart from raise taxes or try to invest in higher risk things with the trust fund, does anybody have ideas about how we could keep Social Security solvent for longer?
I mean, I have an idea. It's not like a specific thing, but like also just like finding new ways to like new innovative, like creative ways, so it doesn't take up so much like so basically Social Security doesn't have that much pressure, you know. So if there's like something else supplementing it, then there'll be like two different things rather than just like relying on Social Security just itself.
Okay.
I mean, like a specific way though, like I mean, I don't really know. I think
Yeah.
a specific way. Yeah.
Yeah, that's an interesting point. Like, I guess if there's like some like government sponsored defined contribution thing that you could pay into, and then you definitely got what you put in out when you retired, plus some predetermined like return, like a 401k directly through the government. And I don't know, maybe that's an idea.
Maybe like well, I mean, maybe there's a law, and I don't know, maybe a law requiring all like certain businesses to offer 401ks and like match it to like a little bit more or to a certain percent, if that makes sense.
Okay. And then people wouldn't have to rely so heavily on Social Security as a source of income in retirement. That'd be interesting too, yeah. Any other thoughts? Another alternative, I suppose, is to cut people's benefits, right? If you reduce, like if you change the calculation for how much I get paid in retirement is computed, you know, suppose today, based on how if I work for the next however many years and then pay this, you know, and then they calculate based on your salary and such. Like suppose under today's policy, I'd receive $1,500 a month from Social Security. We could make a policy change later on that says, oh, you know, based on the same earning stream, you only get $1,200 a month, right? So we could cut benefits, which is unpopular, or increase the retirement age, increase the age at which you start receiving benefits, right? So like none of these are easy solutions. So I'm curious to see more than anything what happens, but I'm definitely not planning on building any expected Social Security income into my retirement plan. Okay. Great question, Michael. Thanks for reaching out with it, and thanks to y'all for looking into it and contributing there. I appreciate that. Should we move on and talk about the fund? We should. It's, you know, a good percentage of our grade if we add it all up. So let's hear what you've got on an update from, let's go around and get an update from each of the groups, if we can, on these three things. Whoever wants to go first can jump in.
I think I'll go. I think, do you want me to, let me check our presentation. I don't, well, so, do you want me to like share our presentation so you could see our progress?
Sure, yeah, let's do that.
All right, let me pull it up real quick.
Other folks, why don't you, while you're waiting for your turn to go, why don't you get your work ready to share as well? That'd be great.
All right, just bear with me because I think I messed this up earlier. Oh, Professor, it says the host disabled attendee screen sharing.
Oh, really?
Yeah.
Let's see. How do I? Who can share? All participants.
Let
Yeah.
me try again.
Try it again.
Oh, there we go. Okay.
I think they've made the default like security settings a little more restrictive in light of recent events that have gone on in Zoom.
Can you guys see it?
Mostly, yes.
Let me see if I can make this bigger. Here, I'll just go like that.
Yeah, that looks good.
Cool. So this is, I actually did not create this slide, but this is our one slide summary, I believe, from the one deliverable. So our recommendation is to buy. Angelica, did you create this one, or was that Somi, or?
Yeah, I created I just made the outline based off of what was posted on Blackboard. I made it kind of similar of what was in the paper that he showed us earlier. I think it was one of the mutual funds from last year that I used that as a guide to pretty much make this as an outline, and just added some information here. But that's really it. I think we didn't even get to this slide yet. We just was working on the basics.
Oh, here, do you want me to switch to this slide?
Oh yeah, that's just,
Because I see you moving throughout the doc.
yeah, that is just the business description.
Industry, we're just getting started on it. Like valuation, market profile. We're getting started on our financial analysis. We're going to be comparing against our competitors, prototype forces. We have our SWOT. Working on risks, coronavirus. I know that there was 2 tigers and 2 dogs that tested positive. So their labs are just going to continue to run as they were before. And then, yeah. So then this is the market outlook for COVID-19. And we have a cute little picture. Yes.
Okay.
And then the final deliverable was, I think our preference was 421, if that's all right.
Yep.
Cool. Okay. Here, do you want me to stop sharing?
That's fine. Yeah. Did you guys make a slide for the stock to sell too, or not?
Yeah, we did.
Oh, did I not show that one? Or do you have it, Angelica?
Yeah, let me see if I can put it up.
Okay. Thank you.
Thanks.
I have to authorize screen sharing. Okay. Oh, so I have to quit and come back. It tells me I have to quit and come back if I want to allow screen sharing. So I'm gonna have to leave out the Zoom and come right back.
Okay, let's go on. We'll move on to someone else. So what does another group provide an update while we're waiting?
All right. Yeah, we'll go next.
Thanks, Michael.
Can you guys see my screen?
Yeah, looks good.
All right, cool. All right, yeah. So yeah, we got ServiceNow going. So far we got the business description. So ServiceNow is basically just like You know, it's an enterprise that, you know, provides cloud computing solutions that defines like structure. It's mostly like an IT company. We have like the mission statement right here. So like the goal of our company is to make customers' lives, work lives like simple as possible. And it has something called let me go back up. The Now platform. So the Now platform is like the foundation of the customer's workflow offerings. So like what that company is based off of is that, you know, getting a job done in enterprise usually requires like different people to get different functions done in organizations. So especially for like big companies, it can be really hard to like communicate from like one department to another department. So they have like a system where they can like all communicate with each other. So that's kind of what it does. Couple industries that ServiceNow sells to is all of these following, which is government, financial services, healthcare, etc. And their main customers are large enterprises. And I thought this was actually a pretty cool stat, is that no single customer accounted for more than 10% of the revenues in the past year. So I think that's pretty cool because, you know, some companies like rely like maybe like 40% of their revenue on like one industry. So like if that industry does bad, like that could really affect them. So I think it's really good that kind of like dispersed. And then how does ServiceNow sell their products? So right now they currently sell them through subscription services, direct sales, and professional services. So yeah, we just kind of got a couple of information on like the basic things of it. Also how they market their product. Like as you can see the following, they have like an annual conference that they host where like a lot of different people from different companies can come and like show how they use the ServiceNow software to other companies. So it's like it's a good way to promote it. We also have a couple of other things about like industry overview and competitive positioning. And then yeah, we plan to do like Porter's 5 forces, talk more about competitors, SWOT analysis. Yeah, and then all of this we obviously still gotta fill up. But that's what we have for now.
Okay, great.
And then for the other deliverable, well, for the other one of the date that we want to present, so we all agreed that we also want to present on the 21st.
Yes.
And then for this one, yeah, I'll let Sean talk about this one for a little bit.
Yeah, so I know we had our group said we'd do a presentation on this, like Dick's Sporting Goods, and why we should sell it. So overall, like we feel like one of the main reasons is we're of course trying to get like diversify outside of the consumers. So we feel like this is kind of like the weakest company, at least within the consumers that we have, because it seems like so far, at least compared to the other ones, like maybe those could kind of be in a good position, but we feel like this one specifically is kind of take a bigger hit compared to the other ones. So for one point, so we found that, of course, the current crisis definitely caused a decrease in expected revenue. Sports is taking a big hit. Actually, all sports in the U.S. have been canceled, NBA, baseball and all that. So that's obviously a huge portion of their business is like selling jerseys and selling different items related to sports, like basketballs, whatever it may be. They've, of course, closed a lot of their stores because they're not essential. So their stores haven't been open across the U.S. So overall, we just feel like it's a solid sell, especially compared to the other consumers that we have in the portfolio.
Got it. All right.
Alrighty. I'll stop sharing. Is it good now? Yeah, it's good.
Great. Thanks to your group. Anyone want to go next?
I could try to share our screen again.
Sure. Thanks.
Okay. All right. I think we're here. Okay, so we chose to sell, we recommend selling Cheesecake Factory stock because of the downward trend since 2018, which has had a negative performance outlook for the next 9+ months. Cake has also lost about 61.1% of shares since their last earnings report following lower than expected results. And the company took a 46% comparable store sales hit during the month of March. which was when the pandemic started. And its stock is considered to be high risk now with the daily average volatility of 9.78%, which is a little bit high for their industry. And the Cake stock has also been declining months prior to the coronavirus. So there is some kind of like uncertainty about the company's future performance once the pandemic settles. Like we're not sure if lifting the stay-at-home order could spike demand, or will people still be skeptical about eating out?
Mhm.
So, and that was pretty much it.
Okay, thanks.
Yeah.
Appreciate it. And then, all right, well, who else? So we've got two more.
I can go next, Professor.
Sure.
Share screen. Just a second, please.
No problem. Yeah.
Let me try to figure this out. Can you see it?
Yeah, looks good. Thanks.
Can you just please tell me, do you want me first to start with like the mini presentation as a deliverable for today, or the final presentation?
Either one, whichever is easiest for you.
Okay, so Caesar and I, we had to basically justify why we think it's a good idea to sell the General Electric stock. And there are a few main reasons as to why we should sell this stock. So basically, General Electric's experienced a significant drop in stock price over the last 5 years. For example, the stock price in June 2015 was $26.22. And as of today, the stock price is only 7.10, meaning that there has been a huge drop in stock price over the last 5 years, which is not a good indicator by any means of the overall economic health. But that leads to another problem, and that's the notable drop in free cash flows, which has occurred in 2018 and 2019. And both of these reasons prove that the company has been struggling financially in the last couple of years. And then in addition, General Electric has faced multi-billion-dollar charges relating to the insurance portfolios. And the SEC is investigating the company's operations, which could likely negatively affect the stock price in future, which has already plummeted a lot in the last few years. And then finally, the company is very indebted with an overall debt of around $11 billion. So that just speaks for itself. That's a huge debt. And given the drop in stock price and a reduction in free cash flows, the company is struggling. And for that reason, we think it's a good idea to sell it and not buy it or hold it.
Sounds good. Thank you.
And then as far as the final presentation for the class, Caesar and I are looking at the Crown Castle International company. And we haven't really completed the whole presentation, but so far we did the company background. So the company was founded in 1994. The company has more than 25 years of experience owning and operating network assets. It has approximately 100 offices around the country, with 5,000 approximate employees and $81 billion of enterprise value. So it's a pretty big and accomplished company. And what does Crown Castle International do? Basically, Crown Castle owns and operates and leases more than 40,000 cell towers, and it supports small cells and fiber solutions across every major US market, meaning that the company is primarily responsible for making sure that the mobile data that we use runs smoothly and it doesn't get congested, especially because we now use our mobiles a lot in everyday life. And then in addition to providing that service, Crown Castle holds a portfolio of communication infrastructure that connects cities and communities to essential data, technology, and wireless services. And by doing this, the company is really bringing information together, connecting people, connecting companies, and enabling businesses to conduct their operations. And yes, our recommendation is to definitely buy this stock, but we really haven't figured it out as to how much of it we should buy. We haven't
Let's see. Sounds like Milan is frozen. Can't quite hear. But that looks good. Caesar, if you can hear me, that sounds good. Oops,
Yeah.
sorry.
I actually just froze too. I just joined back like 5 seconds ago.
Okay.
Did you guys go through? I just joined back in. Did you guys go through the whole presentation, or should I share mine and then finish what we have?
Let's see. I think I got it. From what I saw, from what Milan shared, it seemed like you guys have a good start. So, are you feeling okay about how things are going?
Yeah. Here. Yes. Let me just see if I can share the rest of it. Can you guys see this?
Yes, sir.
Yes.
Okay. So, yeah, Milan was showing you our current progress right now. This is currently what we have. We have a little bit of industry background. We started the SWOT analysis with the strengths, weaknesses, and opportunities, and we have a little bit more of information on that. If you want me to show you on what we created for the fund that we want to sell for General Electric.
Oh, he
was,
went. Oh, sorry, Caesar.
you have this?
Milan went over that, Caesar. So I think we're set there. Thank you, though.
Oh, okay. Did he talk about the depth on General Electric side? Okay.
Yeah, he did.
So yeah.
Thank you, though.
I froze, so I couldn't see what he
Appreciate
did.
it.
Okay. Thank you.
Okay, so let's see. One more group. We've got 3 minutes left in this meeting. Do you guys want to try to squeeze it in now, or do you want to like all disconnect and reconnect? What do you prefer?
I should be able to squeeze it in. I'm with the last group. We had Polaris.
Sure.
Well, I mean, I could, if you want me to just talk, I could just talk about why we should sell that. Let me see if I could screen share it quick. I have no idea how to do this. Safari? No.
Let's see.
Is it all right if I just talk about it? It's just a blank, or it's just a slide with a couple bullets on it.
Sure. Yeah. If someone else has access to it and can share it while you talk about it, that'd be great. Just so I can. So.
Hold on. Give me 1 second then. Wait.
Are you on a laptop by chance? Or?
Yeah, I am. I think I'm. Oh wait, this might be it. Oh no, I'd have to quit.
Okay. All right. Well, yeah. Talk us through it. Talk us through it.
All right. Yeah. So yeah, we had Polaris. And originally, so the share was originally purchased in 2017, and when they purchased it, unfortunately, it was right at a peak. It was at $123, and it hasn't been at it since like that same day, or around that same time. And yeah, so besides the steady decline, they do have a relatively high beta compared to their peers. They have a 1.74. A couple of their peers are like Yamaha, who's the only closer, who has like a somewhat close beta with a 1.63. But Honda is also a large competitor at 1.10, and Harley Davidson with a 1.46. So they are slightly riskier. On MarketWatch.com, under analyst estimates, a lot of they have a lot of hold right now. So obviously, since it's kind of like the sell-off point is a little past due now for a lot of people, but since we needed it to sell something, there's no sell recommendations, but a lot of holds. But since we needed to sell something, we still felt that Polaris would be somewhat reasonable because as of like the last 2 years especially, it's sort of just been moving sideways. There hasn't been much vertical movement, so we don't really see it doing too much. I mean, besides getting back to maybe where it was, we don't really see it getting back to its high of 123. And along with that, they also just like every other place, they've shut down plants, so production slowed. They're not going to have the financials as normal. And also, though, they did have a good week, just like a lot of the companies. So it's not a horrible time to buy or to sell. Excuse me, not a horrible time to sell since it is up a little bit at the moment. And yeah, I mean, just since the fact that it is sort of like a not a luxury vehicle, but something sort of along those lines. we felt that it's really the sales just aren't going to be there after this whole virus is over with.
All right, thank you. All right, thanks for dialing back in. I appreciate it.
I literally knew that was gonna happen.
Yeah. Good. Yeah, I didn't get the like individual second timer countdown, so
Yeah. It just said like less than a minute, so I was like, oh, any moment now I could just do.
let me just send a quick email blast telling everyone to jump back in, but I think everyone is going to.
Professor,
Yes.
I had a few questions about the video, the lesson video that you sent.
Sure.
The one was it was about the employee contribution. Can you do the employee contribution at any time to when you match it?
Let's see. What do you mean? I don't quite understand. Sorry.
In the video, you said you can like the company can kind of match you. So when you do 6%, they give like 10.5% or something like that. Can you do that at any time, or do you have to pick at a specific time and then it carries on throughout like a contract?
No, I mean it's like if you usually set it up to put a certain amount in every paycheck. And then whenever you do that, the employer, if they have that program, they'll match your contributions whenever you do that. If you stop, they'll stop. If you restart it.
Oh, okay. So you can do it at any time, right?
Yeah.
Every paycheck?
Yes. Yeah. And then with places I've worked in the past, sometimes you have to wait a year before they start matching like the money that you put in.
Okay.
And then some places just don't match at all, but it's becoming more of a common benefit for some employers. So that's a good question.
Excuse me, Professor. I'm so sorry, but my laptop crashed, and it took me a while to reconnect.
Oh, no worries. Yeah, thanks. Thanks for letting me know, Milan. It's I got a good sense of. Luckily, you made it through pretty much most of your work. And then Caesar was able to wrap up as well. So no worries at all. Thank you.
So we are good?
Yep.
Awesome. Thank you. And sorry for that. I apologize.
No problem. All right. So Brett and Gunnar and Caitlin and Kedrick, do you guys want to update me on where you're at with the company that you're looking at, Dominion?
Yeah, we kind of spent this week just divvying up the work. So we all have like our own individual parts we're working on. Mm-hmm. So right now our presentation looks the same as last week, where it's not like actually compiled, but I think we all got a pretty good start on what we're doing.
All right, good. So would I be correct in guessing you'd prefer April 21st to April 14th as a presentation?
Yes, the 21st, please.
Okay, well, let's plan on all groups presenting then. And then I appreciate the updates. So I think as far as deliverables for next week, I think I would really, I think we should really just try to bring together a draft presentation by next week, and then have it mostly completed by next week, and then be ready to present on the 21st. I mean, I think we should just focus on that, and then that'll chew up, I think, a decent amount of your time. So does that seem reasonable to have one deliverable like that? Get the presentation put together, and maybe then the week after that you can start practicing it.
Yep.
Yep.
Okay, let's do that. And so if you have, feel free to run your work by me, right? If you have questions about anything, let me know. But yeah, we're getting towards the time where it's going to be, the time is compressed and there's a lot going on. So let's do that. Any other questions while we've got the group here together?
Yeah, I got some more about the video if you want to hear them or not. I don't know.
Okay, yeah, let's talk about that. Any from anyone else before we get to Thomas's questions? Okay, all right, well, I'll stick around and then I'm happy to talk about anything else, but if you're comfortable with where your group is at, feel free to jump off and we'll talk to everyone soon.
Thank you.
Thanks. All right, Michael, yeah, or Thomas, sorry, what was your question?
Okay, no, I think you mentioned this later in the video. Is it better to withdraw taxes later because you're in like the like in the retirement, you're in the lower bracket?
That's usually the case. Yeah, most people are in have a lower like marginal tax rate than in retirement than they have when they're working. And then even if it's the same, it's still better to defer taxes just because it's like a present value problem, right? Would I rather pay somebody $1,000 today, or would I rather wait 20 years to pay someone $1,000 that I owe them? I'd much rather wait 20 years because then I could do something with the money and
Yeah.
so.
Okay. And then I was gonna ask, in your opinion, do you think it's better for the DC or the DB plan?
Yeah, that's an interesting question. They're really pretty different, and in the U.S., defined benefit pension plans are just becoming less and less common. But I'd rather personally, I guess it depends on the terms. Like my father-in-law, my wife's dad was a public school teacher in New York City for like 30 years. He's retired now, and with his pension, I think his pension and Social Security, he makes more money now than he did when he was working. So he's got a great defined benefit pension plan that he paid money into and such. But
so yeah, like under like what aspects do you think like DC would be better or DB would be better?
Yeah, it's hard to say because like I feel like defined benefit pension plans are just going to keep getting more and more costly because employers really they got bit by the fact that workers started having more healthy retired years, so they had to and the pension plans like investments didn't earn returns that were good enough, and so like pensions companies are on the hook for paying out benefits to retired people that are living much longer, and then like the money that they're investing to try to pay out those benefits to retirees isn't performing as well as they'd hoped, and it just kind of creates like a funding problem for pensions.
Mm-hmm.
So as a result, they tend to like reduce benefits for new people that they hire, saying like, oh, we used to have this pension plan where if you pay into it and work here for 30 years, you'll receive 75% of your ending salary.
Uh-huh.
And now when we hire new people, we say, oh, it turns out we'll hire you and your defined benefit pension plan will pay you 30% of your ending salary. So I feel like they're just becoming less and less common. So.
And now, which video is this one?
If you take, let's see, is it from?
I don't think I've hopped on this one yet.
It was April 7th one.
April 7th, yeah, it's dated as April 7th.
Okay, is that the financial modeling? No, that's this one. Oh, that's for this class.
Yeah, that's for.
Oh, so you got a step ahead. Okay, cool.
Oh, was it? Wait, was I supposed to watch this before this class, or was I supposed to watch it for next class?
Either way is fine. I mean, it's dated as of today, so whatever. Yeah, as long as you're roughly on track with the timing, and I just don't want folks to get too far behind. So watch it sometime this week. That's fine too.
Okay, and I think I have one more. It was about the traditional IRA and the Roth
Roth, yeah.
Yeah, Roth. Are you still considered in like the lower bracket when like after you retire? So would it be like I think I said wait, hold up. I wrote this question down a little bit differently. Like would it be better to do it the traditional one or the Roth one after like when you're considered into the lower bracket like in retirement?
Yes. Yeah, so like would
because I think you said like traditional, to choose traditional. People would choose traditional. That's what I think you said in the video, but
yeah, most people for tax purposes, like if you're in a higher tax bracket, when you're working than you are when you're retired, the
Mhm.
tax advantages of a traditional IRA make sense where, oh, let me defer paying taxes later. And then also if I have a lower tax rate in retirement, right? A traditional IRA is like a 401k where you don't pay taxes until you take the money out. You don't, like, you put in pre-tax dollars and you pay income tax on the money you take out in retirement. Whereas with the Roth IRA, it's more, if you expect to be like, if you think you're going to have a higher tax bracket when you're retired, then the tax benefits of a Roth IRA make sense where, oh, I'll pay taxes now on the money that I put in, like put in after tax dollars, and then the money I take out isn't taxed at all.
Okay, so like, if putting it into this aspect, like we said about the Social Security, like if the Social Security decides to pick up our taxes, it's better to us to do the Roth one IRA, right? Like for people to do the Roth IRA if they like the government considers to increase our tax later because of the Social Security.
Yeah, I suppose. Yeah, like if I'm expecting maybe a higher, if I'm expecting tax rates to increase in the future,
Yeah.
so that I'll have a higher tax rate in retirement, then I suppose that could be an argument in favor of choosing a Roth IRA.
Yeah.
That's an interesting point. Yeah.
Okay.
Yeah, I have a question about the Roth IRA too. So are you aware of like the steps and like how like is it like easy to open one up, or is it like does it take a long time to open one up? Like, and also when's the best time? I know it's like really early, but like, what are your thoughts?
As far as the steps go, like if I had to open an IRA today, I'd probably look at whoever I have any investments with. Like, I mean, you can open one through like Fidelity or Vanguard or like any big company that manages money in any capacity. I'm sure you could also like go through like a financial planner through AG Edwards or Edward Jones or something. So I think there's, like, I would start by looking at some bank or financial services company like that to open one. And then, like, if you've got money to invest now and you want to invest it on a tax advantage basis, I suppose, yeah, the one time when it might make sense to be start a Roth IRA as a college student is if, well, I've got, I don't pay any taxes now, and I still have some money to put away, so let me put in after-tax dollars and then take it out in retirement untaxed. But yeah, I don't know about the timing. Like, would you be better off doing like some like short-term savings so that, building an emergency fund, like 3 months worth of living expenses or something like that? Yeah, I don't know. I guess it depends.
So with the Roth IRA, you can like set it up with like your employer, right? So it's like it takes it automatically out and then into it.
I'm not sure. I think in most cases you just I don't actually know how it works. I think you can set up a direct withdrawal, like from, like if I open my account through Fidelity, a Roth IRA, I could set up automatic withdrawals from my bank account that I have linked to my Fidelity account.
Okay.
And then, like with the traditional IRA, it reduces your taxable income. So when it comes time to do taxes in a given year and you've contributed to a traditional IRA, you get some kind of form, a tax form from Fidelity that says, oh, here's how much you put into the traditional IRA this year. And then you plug that into TurboTax or wherever you do your taxes to reduce your tax liability. Whereas like with my 401k through my work, I don't get an extra form. It's just the money comes directly out of my paycheck and my taxes are automatically lower.
Mm-hmm.
My employer knows to withhold less federal income tax because I'm putting money in.
Oh, cool.
Wait, quick question, Professor. So if I like say I own a business, is it better for a traditional IRA or the other IRA?
Boy, yeah, that's a good question. I'm not sure. I don't know the answer. That's a good question. So if you own your own business and you want to save for retirement, I think there's a couple other plans out there, like a small business IRA plan. There's something called like a simple IRA or something like that. And I just don't know enough about it to know the ins and outs to be able to answer it, unfortunately.
No, that's all right.
You got a business you're running or what?
No, I mean, you never know, you know. Just might have
he's
to
got
come up
some
with
he's got some good plans cooking up for the future.
Yeah.
gotta gotta invest in some ideas.
Yeah. I mean, if it were me, I would probably say I would plan to put money into a traditional IRA unless it got so big that if it got big enough to the point where I was thinking about should I do a traditional IRA or change it to a Roth IRA, I would probably hire seek some kind of like professional advice about whether to
Yeah.
switch before I would just switch myself.
Professor, can you please explain again how come your taxes are lower because of that case?
Oh, if you put money in a 401k or a traditional IRA, like how does that save money on taxes?
Yeah.
Yeah, so it does. There's three things actually. So the first one is the money that goes that you like while I'm working now, the money that I deposit into my 401k is reduces my taxable income. So that's the same thing as saying, oh, you deposit pre-tax dollars into this 401k. So like if I make, $30,000 a year and I save $1,000 in my 401k, then my taxable income goes down to $29,000. So I'll pay less income tax total. So that's the first way. And then the second way it reduces taxes is that, like we said, like it defers the time, it defers when you have to pay the taxes. So the money that I'm putting into my 401k now, I won't pay taxes on for another 35, 40 years when I can finally retire. So the fact that I can not pay that money now is valuable to me. And then the third way is that most people usually have a lower income tax bracket in retirement. So if my marginal tax rate is probably, I don't even know, like 25 or 28% now, in retirement, it'll probably be lower if I have lower income, which I probably will.
Thank you.
Yeah, good questions.
All right, thank you, Professor.
Thanks, guys. Everything else going all right?
Yeah,
Yeah, everything's going good. Yep.
Nice. Great. Well, good questions. Thanks for hanging around. We'll talk to you soon.
Thank you,
All right,
Professor.
sounds good.
Thank you. Have a good one.
Thanks, Marta. You too. Talk to you soon.